Hello, fellow traders. 'Tis I, the Rumpled One. Sunday, February the 4th, the year 2018. Super Bowl Sunday. Well, the Patriots. What happened to their defense? It was non-existent. Oh, I just couldn't believe that play when the quarterback caught touchdown. I was taught in high school, you see some kind of trick formation, you call a timeout. You regroup. That was just idiotic. Anyway, back to trading weekly, open and gap. Here we go. Money and risk management. Once again, fundamentals. You have to focus on it. And here we go. Looking at the dashboard, we can see we've got, about 5 pairs that haven't filled the gap. So for those of you just tuning in, Friday's closed, and then the weekly open on Sunday, Monday, depending on where you are in the world. Usually the open is different from the close, and that's the gap, and that gap usually fills. And it's pretty much easy money. Well, let's take a real quick look here, because I can see the euro yen, one of the pairs I do like to trade. You can see here it's down, it gapped down 20 pips, and right now it needs 13. It almost closed. See, the close was at 0.203, and we had a high of 0.186, so it's getting close there. Let's put this back on the pound dollar, because that's what we've been focusing on here. We're picking one pair and probably trade it all month, or at least analyze it all month. And we look at the daily chart, and you can see right here it broke through the last session, which was Friday, that low. And it looks like there was about a 20 pip difference to be made. We've got, let's see, 1.40999, and we've got 1.4081. So yeah, what's that? 18 pips. Not a bad trade. Now that's one of those trades where it's a coin flip, because you've got reasons to go short. It's right there knocking on the door. There's a breakout, but there was a gap. It had gapped down. Price had gapped down. You can see right there. It closed that gap, so there was reasons to go short, reasons to go long at that same position. I think I might need a new mouse, because you can see here on the H1 chart, we opened, fade the gap towards there, then it turned around, gap down. You got the trigger here if you wanted to go short. Let's see, I believe this was, that low was right there, daily low, which was right about the open. So you could have made money, see, going either way. You've got the break, the low break, the short break, then you turn around, you get the daily weekly open crossover right there. You get a buy zone trigger, you're fading a gap. So you could have made money trading either way, or if you don't, you could have traded both ways. Very simple. But like I said, that's one of those ones where you would say, okay, well, which way should I go? Now, sometimes on that first hour, I might not even trade. I usually don't. I usually wait to the second hour. So in this case, I may have taken that. I didn't. I would have probably said, let's see what happens. Let's go toward the gap fade and take that high probability trade. And then here, rat zone, as you can see, we've got the I wonder why that's not pink. What's going on here? Did I change something in the rat zone? Short. Oh yeah, I can see it. It's hard to see, but yeah, it's got that shading. I guess it was the angle I was looking at. But you can see here, we really don't have much of a range. 44 pips. So at this point in time right here, there really wasn't a rat zone trade. Usually like to let the price spread out before I start trading a rat zone. And here we have the pivots. We got the open. There's the pivot line. You want to fade toward the pivot. There's the weekly pivot. It was hit. So fading the pivot is this way. Today we're going this way, fading to the upside. That reminds me, I think I was going to do maybe a separate video or really incorporate some of the pivot code that I've written for different ideas. In fact, I've got another new idea Trader shared with me, and that'll be coming soon. I'm working on some of those indicators. If you wonder, well, geez, you've got all these different systems, why are you even trying another one? Because you might learn something. And it's just a little coding challenge, see if I can do it and understand it and see if it works, and maybe I'll incorporate it or maybe I won't. But nothing ventured, nothing gained. And here we go, the price action. It's pretty simple here. Here you've got that turn trade set up right there. You could have taken that. You could have taken the green crossover, H1 green crossover right here at the triple O or double O, however you want to call it. I hate that fifth digit, but you can see here that was a worth 20 pips, just taking that simple crossover. And looking at the lines from the previous day, once again you can see here that daily low. Take the green there, once again green at the line, you go long. Red at the line, you go short. Here was red at the line, but it reversed quick on you. In fact, you had a low 40.97. So there was what, maybe 4 pips to grab, 3 pips. Sometimes you just have to take those 1 pips or scratch the trade. It's just it's not, if it's not going your way, it's going against you. So every trade's not going to be a home run. You got to take those singles when you get them. And here we've got the wick zone. And you can see here, price once again doesn't like staying in the wick zone, and it's popping out as I speak. And here we've got the holo set up. Once again, price puts in a higher open, comes down right there. You see once again it's the highest H1 open. We're looking at M15 candles. In case you're getting confused, I can switch this to the H1 and you can see here there was the highest open. But I like to look at the M15s. Usually gives nice clean signals for doing the holo trades. And you can see here it's getting into that holo zone. I almost took this chart off, but I know we got to play with the squigglies. We just have to. I just like poking fun. But obviously here price crossed down through the squiggly, the moving average, and so you want to be short. And here we go looking at the ticks. You can see there's not really much action happening at the moment. I haven't had the computer on long because I was watching the Super Bowl. I mean, hey, sometimes you just have to let trading be off to the side. That's it. Um, I'm not really sure if there's anything to add. Once again, you guys, we see this. This stuff is just really simple. We start the week, fading the gap, and then we look for the, we look for the weekly open crossover. We look for our rat zone reversals. We fade the pivot. We look at price action. We can take trades based on yesterday's candles. The low, the close, the mid, the open, and the high. Because there's usually price action around those areas. And we've got the wick zones, which is based on, yesterday's high, the candle top, the candle bottom, and then the low, which is, once again, looking at this area. I mean, here's the lower wick zone right here. There's the upper wick zone. It's just a different presentation. That's all. But it's the same thing. Price just does not like staying in the zone. The highest open, lowest open setups. One of the opens, we got 24 opens in a day. One of them's going to be the highest, and chances are price is going to reverse. And one's going to be the lowest, and chances are price is going to reverse. It's just that simple. With the squigglies, what can I say? You're going to be all over the place. So anyway, fellow traders, I hope if you watched, you enjoyed the Super Bowl. Some people think it was a great game. To me, the defense was just way too sloppy for my liking. But, that's just how it is. But when it comes to trading, fellow traders, it's not what you trade. You could trade Forex, you can trade stocks, you can trade, anything, any instrument, any financial instrument. But it's not what you trade, it's how you trade it. That's what makes the difference, how you trade it. What systems you use, what methods. That's it. It's not what you trade, it's how you trade it. TheRumpledOne signing off. And tomorrow, we'll be draining the banks.